Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. All right, daily chart, and you can see we engaged the upper band. We're currently above the 50-day exponential moving average. You had Google earnings and Microsoft earnings after the bell yesterday, and that kind of shook the market loose a little bit. The high from yesterday was 38.74.25. We're currently trading 38, 33, 34, so they took about 50 handles off it, but it certainly didn't dump it out. It wasn't like CPI, we're going to zero, look out, below kind of a thing. So I'll be interested to see today if you get your standard morning low dip buy to come in and take it and try to do a higher high. What I would say to the bears is it would be in your best interest to put together a day today, because there's going to be more earnings throughout the week. And, as this stuff continues, it's going to be pretty imperative that the bears challenge and try to get back below things like the hourly mid-band, things like the 9-day, the 20-day, weekly pivot, standard things that typically, need to perform in order for the bears to be, or the bulls, in order for either side to be, either side to have short-term tape control. So they knock it down a little bit, not a lot. Does that turn into a dip to a higher high? Or, do we continue to see a series of lower highs that just kind of slowly bleed out, as we go? So hourly chart. So we had our compression, we had our expansion, but we talked about how this was not sustainable in yesterday's webcast and how we were going to get a move. Well, they kind of head faked it down there. They did 4 hours below the hourly mid-band. Monthly pivot continued to be support, as we discussed, and they popped it. They popped it and they ran with it. They printed a high. They brought it back in on earnings, but we basically been bisecting the hourly mid-band for the majority of the night. We just had trade good, advanced trade balance, and the wholesale inventories at 8:30, and that didn't rip it. So you've seen pretty much a slow bleed since a couple of tests of the 53-54 area, one at about 4:30 in the morning, the other one that was really rejected pretty well at about 7:30 a.m. So again, here's your monthly pivot. That's job one as far as I'm concerned. If you want to demonstrate, bears, that you're still here, you can't let whatever this is going to be turn into a dip buy that's going to take out this high. Can't do it. So, and I'm starting to wonder out loud. I've been wondering inside, but now I'll wonder out loud if the real issue here as we head towards the Fed meeting next week is walking it back up to this pre-FOMC price at 39.0175. I wouldn't be surprised. We've seen it before. You can see it again. So monthly pivot is job one for the bears. Then you get into these key areas that I mentioned a couple minutes ago. The 9-day, weekly pivot, the 20-day. Where are we Friday at 4 with respect to all of these levels? That's going to be the key into next week, into November. That's going to be key. You've had some tough earnings. I would suspect that you're going to have more of the same as you get into stuff like Apple and other stuff that's reporting later on in the week. What's the reaction? Do those turn into dip buys, or are they, is it sustainable downside? So here we are. Volume weighted average price is tied up with daily pivot at 38.39. We're currently trading 34. The 5-minute mid-band and our proprietary moving average are just above the hourly mid-band at 38.42. So short and sweet today. That's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. Come learn how to trade this stuff. Come trade with us. Great group of people. Love to meet you. And come and see if this can make a difference in your trading. If you trade the E-mini, it will make a difference in your trading in a positive way. All right, take care. Talk to everybody tomorrow.